Well, thanks for coming today. Appreciate your time. Certainly, I know you're busy, so we'll try and keep this to a minimum. Today, I just want to run over a few things about commercial lending. One is the commercial lending landscape, so what has happened in the last sort of 20 years and what's happening now, the types of loans that are available, and then how you can sort of hone in on different products and solutions to expand your commercial lending portfolio. What does it look like right now? Well, there's plenty of opportunity in commercial, and the reason is that brokers have been writing home loans now for 20, 25 years, and the marketplace has been educated, and so people think, well, I might not just go straight to the bank now, even if it's a commercial loan. However, there's still plenty of people that don't do that, and as a result, only 30 to 35% of commercial loans are written by brokers. And I see that as a huge opportunity for you to expand your portfolio from just residential to offering commercial solutions. It doesn't have to be everything. It can be, just one or two products to help you step into the world of commercial banking. So over the past 20 years, not only have we increased exposure, the marketplace has grown, but also there's more lenders in the marketplace. So that means that you've got more solutions to offer to clients. And that is fantastic because it means that often there is a solution for a well-designed deal. Often we will say, if it makes sense, we can typically get it done, even if it's not the first solution that the client thought of. So that's where we've been in the last 20 years. We've educated the marketplace, we've expanded it. And now, what are the types of loans that are on offer? Well, if you're going to step into commercial, then there's some jargon that you'll hear, and the first part of it is secured or unsecured. And just so that you know what that means, if someone says it's unsecured, that means there's no property as security. That's all it means. It doesn't mean that someone isn't taking a charge over a business, for example. So types of loans that are unsecured, often you'll see that they are short-term loans. You'll sort of, prosper, shift, on-deck style cash flow lenders. They're driven by bank statements. They're not financials or tax return driven, and they're not large amounts. I mean, you can get up to, say, $500,000, but they're not your typical sort of $3 million purchase, etc. And they're often for businesses that are expanding, working capital requirements. Someone has taken on a project and they need new staff and new materials, and they need some short-term help. So often that's an unsecured product. And then on the secured side, you've got anything from a commercial property to SMSF, which again is commercial or residential property. It might be that you do need some project funding for a development, for example, and that's going to be secured. We need to take a mortgage over something. I have seen some people try and do a development where it's a JV and the vendor is putting the land in or not or what have you. But all I can tell you is that if you're going to build something on land, then we need to take a mortgage over it, and that's secured. Now, sometimes people get a bit confused, particularly when they want to buy a business and they want some unsecured money against the purchase. That is, can the business pay for it? Yes, we take a charge over the business, but again, because there's no property, that means that it's an unsecured advance. So I really want to get that across to you because it's just some information or jargon, if you like, that you need to know if you're going to step in to commercial finance. So what are the common types of loans? Well, the one I just mentioned, which is unsecured working capital finance. So it's a business, they're expanding or starting up, or they've won a project, they need to bring in some stock from overseas, etc., and they just need some working capital, that is some funding, to help them through this period of time until they start to collect on the sales that they're making using the stock. The other types of deals that you might see around the place are commercial property loans for purchases of premises, and private lending. Often private lending is a term that no one likes. You might just call it no-doc asset lending. You've got a house or you've got a property, there's no financials required, you draw down on the equity and you use that money to go and expand the business or to pay out other debts. And so that type of funding's definitely in the marketplace and increasing in value in terms of the amount that's being written. What are the types of commissions that you make in commercial finance? Well, not necessarily larger than residential, but often you do get to choose the amount. So with a vanilla commercial property deal, you might be at 0.5 to 0.6, just similar to a home loan. But with equipment and vehicle finance on the commercial side, you might make anywhere between 1% and 4% of the transaction. With unsecured loans, again, up to 4% commission on the loan, and the work involved is a lot less. It's about delivering solutions. So with types of finance like no-doc asset finance, like private lending, you will have to put a brokerage in there. And competitively, the standard rate for brokerage is somewhere between 1% and 2% of the transaction amount. Now, some brokers from a residential perspective will find that difficult. They will find it difficult to add in a charge or a fee to the client. And all I can say to you is that the more you do it, the better you'll get at it, and you have to start talking about the value that you're providing and the solution you're providing. I have often said it's not up to you as a broker to decide what your client will pay. They will need a solution, and you're providing it to them. So those are the sorts of numbers that you can make. Trail in a commercial sense is often larger. Instead of 0.15 or 0.2, you can often get up to 0.3% trail, which is a doubling, right, of standard residential. So building a large commercial portfolio makes sense for the long term. Common types of commercial loans, unsecured working capital, I think we just went through that, for expansion, etc. Commercial property. So the top three that we hear about are unsecured business advances, commercial property, and development finance. With development finance, we'll get to that in a moment, but commercial property, you can typically borrow up to 80% on a smaller transaction, say up to 1.5 million, 80% up to 4 million if it's owner-occupied with certain banks. And then in larger transactions for a very strong business, we can do 100%. And certain fields like medical specialization will do 100% as well. But on the whole, if it's a standard business buying a warehouse, think 70 to 80% is your maximum. So there are some times we get requests for farms or whatever at 80%, and it's really not going to happen. The reason is that security that you're offering is what we call specialized security. So how to differentiate between what's specialized and what's not? Well, you need to think, can I use this for anything else? So a specialized security might be a motel or a childcare center or a nursery, etc. It's not just a standard, warehouse with a mezz floor, etc. So, and if it's specialized, then the LVR is going to be lower. You can start off at about 60% and go down from there. And why is that? Clients will say, well, how come? Well, because it's the risk of being able to sell it later on. Not everybody can buy a childcare centre. Not everybody wants to. And so the market for sales is much smaller. And as a result, banks lend less. Development finance, in another episode or another webinar, we'll run through the numbers, but basic rule for development finance is you can borrow 80% of the total development costs, or you can borrow 65% of the net realisable value. The net realisable value is calculated by taking the gross value, which is, say, 10 units at $1 million is 10 million, and then deducting the GST from that 10 million. So let's say, I'm going to say we end up with 9. I know it's not quite, but let's say it's 9 million. 9 million at 65% is borrowing against the end value. So it's one of those two calculations. It's 80% of the total development costs or 65% of the net value. The rule of thumb for you is with development, if you own the land entirely, that is, it's unencumbered, you've probably got enough equity. So if a client comes to you, and that's not a discounted value, a client comes to you with $1 million of land to develop, it's worth $1 million, we don't discount the LVR down to 80%, it's just $1 million into the project. And typically that makes up 30% of the cost, and as a result, they have enough equity to do the development. So that's a good rule of thumb. If you're a residential broker and someone wants to buy a house and knock it down and build 2 more, how much equity do I need? Well, you need 30%. And that's usually the cost of the land. So if someone is saying, well, look, I've got land worth $1 million and it's leveraged to 800,000 with a residential loan, they're going to need equity from somewhere else for development finance. What does Xenium offer to residential brokers? Well, we offer a range of solutions, including short-term lenders, up to 40 of those, private lenders, no-doc finance, etc., mezzanine funding, second mortgages. Those are some of the specializations that we can offer residential brokers that maybe you don't have access to at the moment, along with the standard sort of commercial lending solutions with major banks and non-banks. There's some case studies just to show you the types of deals that we've done. The first one's a gym. It was a couple of $1 million. It was secured. The clients had experience in the industry. It wasn't an easy deal, but it was one that was done with one of the major banks. And the key difference was that we negotiated with the bank because the franchise agreement was only for 5 years. And as a result, a number of banks did not want to give them a loan for more than 5 years, even though it was fully secured by residential property, which sounds ridiculous, but they have their reasons. And so we found a bank that was willing to do a 15-year loan term for that client. The other two, commercial property was done 80% just with BAS. So up to $1.5 million, there's some product out there that's 80% LVR using the last BAS statement only. And the last one was some ATO debt, which we refinanced. You're going to find ATO debt, if it's not already today, is becoming a bigger and bigger issue. Interest deductions for ATO debt are not going to be available anymore. I don't know if anybody realizes that, but you can't put the interest on your ATO debt on your next tax return anymore. You can, however, convert it to business debt by refinancing it out for the client. So, and by refinancing ATO debt, you open up more opportunities for that business client because now they can borrow money for other purposes. How do you write commercial? Well, you can do it yourself. It's up to you. Or you can just refer it to a bank, or you can refer it to someone like Xenium who helps brokers process deals. So we have a name and number or tick and flick option where you're paid 30% of the upfront and 30% of the trail. Or we've got another option where you're involved in every aspect of the deal with us. And in that case, you receive 50% of the upfront and trail. And we find most residential brokers prefer just a tick and flick, and we handle it. You get notified along the way, and then we pay you when the deal's done. So where do you start with commercial? Well, you need to start talking to people. You need to decide what you're going to say and then be consistent about that message. Sometimes people are overwhelmed by commercial. They think, oh, if I offer it once, I have to offer everything. That's not true. You don't have to talk about everything. You can say, I'm a residential and business and commercial broker, or I do residential and commercial. You can broaden your language and your title a little bit. But if someone says, well, can you do X type of loan? You simply have to say, look, I don't specialize in that, but I definitely know people who can, and I can help out. So have a think about the types of solutions that you want to offer. One way to step away from residential, or at least expand away from residential, is to choose just one commercial product like self-managed super fund lending. You already have that probably on your panel right now if offering it as a solution for clients for investment. I like SMSF commercial lending, and the reason is most of the time it's a business owner that's buying their own premises. So most of the time I can offer that business owner other business and commercial products, and those business owners want to buy houses as well. So if you think about it from the specialization point of view, if you want to offer something that other brokers find it difficult to do, you stand out from the crowd for one, and secondly, you've got opportunity in not only the self-managed super fund lending, but also the business, commercial, and residential lending of that client. So that's just one way to choose a niche that has more benefits than the actual product that you're offering. Okay. What else can you do? Well, talk to clients about what you're doing and talk to referral partners about what you're doing. Let them know in your networking breakfasts or your meetings with accountants, etc., that you're offering commercial, that you're expanding. But don't just talk about products. Talk about solutions such as solving tax debts, solving business purchase premises with SMSFs, making sure that people who are existing self-managed super fund lending, for example, are getting refinanced because they're paying too much, or solving cash flow issues. So you don't have to talk about specific products or lenders or interest rates. You just have to tell stories about solving problems. And then you can work out later on how to do that. And you can do that with us. We can help you do that. The other way to look at commercial is to say, well, how can I expand this sort of naturally? That is what's happening in the environment. So during the year, certain events happen and other banks and non-banks start advertising. So, there's car run-out sales. There is a lot of equipment and car purchasing around May, June for tax reasons. There's investment property purchasing around that time. You'll find that in September and October, people in businesses need cash flow, and you'll see that the large cash flow lenders start to ramp up their own advertising and marketing. So you can piggyback off that marketing that they're doing already and send out solutions to your referral partners and your clients to let them know that you can help them with these things. What works from a commercial point of view? We think choosing a niche. That is, instead of saying, I'm a commercial broker, let people know that you specialize in something. I mentioned before self-managed super fund lending, but it might be that you finance accounting firms or rent rolls or financial planning firms. Or maybe you're an expert at commercial property 5 million plus. Choose one thing and then learn about that and then talk about that for a period of time. And what you'll find is that other opportunities come to you because of your knowledge around that particular product or service and solution. So keep it going with in terms of communication with partners. Get to know the product and or solution that you're offering. And when you know it really well, you'll be able to talk about it nonstop, and as a result, be seen as an expert in that area. And you'll see that there's plenty of other opportunities will come because of that. What else can we offer? We offer a solution where you can refer deals to us as a residential broker. You can learn along the way, or you can simply use us as a referral partner and get paid your upfront and trailing commission. We do have tools that you can use, like a development feasibility, like a business purchase calculator, brochures on how to charge fees and why banks pay commissions and the difference between those things. So we have a range of existing educational and informational tools that you can use as a residential broker to start building your commercial portfolio. Okay, that's all we've got for today. Again, appreciate your time. If anyone has any questions, please let us know, and we'll talk to you soon.